Welcome once again. This is Pinnacle Professional College, and today we bring you an exciting lecture on advanced audit or audits. And we've been talking about the impact of technology on audits, and today we'll be specifically looking into blockchain audits. Now, anytime you hear the word blockchain, what comes first to mind is usually Bitcoin. You know, blockchain first arose as the technology behind Bitcoin and has been evolving ever since. Now, what is blockchain? What is blockchain? So blockchain technology basically allows two parties, right, who do not know each other. Two parties unknown to each other to transact without using an intermediary. Right, so just imagine in the traditional way of doing things, two parties can, transact, can do business, but with an intermediary or a trusted intermediary, which is a bank. So let's say if Kofi Menu wants to send money or wants to do some transaction with Bob in the USA, there has to be a trusted intermediary to facilitate that transaction. But what blockchain has done is that it allows two parties who do not know each other to transact without using a trusted intermediary like a bank. And the impact of that is that it helps to cut costs. It helps to cut costs. So how is it able to achieve this or pull this off? It does this by offering internet-based ledgers with ready-to-access information. Both parties to a transaction will be able to access an identical ledger, eliminating the need for reconciliation work. All right, so the way it seeks to achieve this it takes out the middleman, which is the intermediary, is that it offers internet-based ledgers to these parties, to the transaction. And these parties are able to access these ledgers, internet-based ledgers, and therefore it eliminates the need for reconciliation work. But essentially, what you need to understand about blockchain is it takes out the intermediary from the transaction process and allows unknown parties that are known to each other to be able to transact, and therefore substantially reduce transaction costs. Blockchain technology provides a verifiable record of all transactions ever undertaken through the network. A blockchain audit allows auditors to test all transactions in the blockchain rather than perform substantive testing on a sample basis, as is currently done with a traditional ledger. So one of the things that blockchain does is it provides a record, a verifiable record of all the transactions that have been taken through the network, or all the transactions that have been done through the network, right? So there's a verifiable record. And so when auditors are testing transactions, rather than perform a test on a sample, right, it allows the auditors to be able to test all transactions in the blockchain. They're able to test all transactions in the blockchain, and that increases the assurance level. Remember that blockchain technology uses what we call internet-based ledgers. And internet-based ledgers eliminates the need for reconciliation work. Traditional ledgers is what is currently being used. It's more predominant now, right? But for blockchain technology, it uses internet-based ledgers. Additionally, auditors can access the blockchain to verify information themselves, reducing the need to obtain external confirmations. This is a very good point, right? In the normal audit process as we have it today, auditors must get external confirmations. So for instance, right, when you're talking about making transactions, there's usually a trusted intermediary like a bank, right? If an auditor has to get external confirmation, what it means is that if they look at the client's financial statements and it says they have a cash amount of $50,000, then the next question will be, with which bank? Then they probably say Barclays Bank, right? So now they need an external confirmation, which allows them to go to the client's bank to say, hey, our client is saying they have $50,000 in their account. Is this true or not true? Right? And they confirm that. That's what we call an external confirmation. Right? So that is the traditional auditing procedure. But with blockchain, auditors can access the blockchain themselves. They do not need an external confirmation from the client. They can access the blockchain themselves to verify the information themselves, and which makes it easier and more accessible. And the audit may even be able to be automated for more routine transactions, which increases the efficiency of the audit process. So blockchain audit is going to be an exciting one. It's continuing to evolve, and I'm excited to see its future. Now let's talk about drones. So what would drones have to do with audit? Somebody might say, but one of the key things that happens in audits, for people in audit will realize this, is that what we call inventory counts or stock counts or stock taking, right? Currently, the process under inventory counts or stock taking is done by a human being who literally has to go do the counting, right? But the use of drones in auditing is another recent technological development, And so far, drones have been used in a very small number of audits for the inventory audits, right? But what drones help to do is it helps to basically cover a larger area where inventory is located in a shorter amount of time than a human auditor will be able to do. And that increases efficiency. They can also be used to scan or film inventory that is stored high up in warehouses, which will otherwise be difficult for the auditor to access. All right, so drones are now being used to audit inventory because they are more efficient in that regard. Now let's move on to the impact of emerging technologies on audits. The fundamental principles of audit and assurance remain the same despite the evolution of new technologies. Subsequently, the IAASB has so far resisted any calls for wholesale changes to the ISS, which is the International Standards on Auditing. The IAASB is, however, committed to keeping abreast of the technological advancements, right? So the IAASB is looking to constantly keep on top of these technological changes that are happening in our world today. So if any of these is constantly monitoring how these changes in technology are going to affect different areas of the audit. And the IASB have set up a project team for this purpose. Practitioners must, however, ensure they continue to understand technology applicable to their clients to enable them to identify and assess audit risk properly. So what does this mean? Let's explain this. Practitioners, however, ensure they continue to understand technology applicable to their clients. So if you're an audit practitioner, you must understand how technology affects your clients. So first of all, you must understand the industry. So let's say if you are going to audit a bank, right? How is technology affecting the banking industry, right? How is it affecting the banking industry? And how is it specifically affecting the clients you are auditing? You must understand, as an auditor, understand the technological issues behind your clients. behind your clients, because that's going to help you to properly lay out the audit plan and the audit strategy. And so it's important to know that as time passes, as time goes on and technology becomes more and more advanced, the tools and techniques employed in performing an audit will also evolve. You know, in ages ago, a lot of things were manual. When you are doing audit, it's very, very manual. But as things began to improve, the audit procedure and the audit tools, the techniques began to also change. So for instance, one of the things data analytics seeks to introduce to, to auditing is the fact that currently in audits, to audit a client, you can only, through your substantive testing, you can only audit a sample of the transactions because you do not have, one, the time, the resources, and the tools to be able to audit every single transaction. So auditors would employ sampling techniques to audit a sample of the population. But what data analytics can help to do is it can help to apply an audit test on 100% on everything on the population, and that helps in terms of increasing assurance levels, right? So it's able to, assess or analyze 100% of the population, or even a larger sample compared to what is currently being done, and it improves or it increases the assurance level. So these are some of the impacts that technology is having on audits. And in our next lecture, we'll be delving into government external audits. And if you haven't subscribed to this channel, please do so. Thank you for watching and have a good day. Bye-bye.